All right, so candlesticks, triple patterns. Triple patterns, just like double patterns, you're going to be looking at this over a couple days rather than just a single day or a single day's action. And they give you a better sort of overall picture of what's happening together. So the first one is the three white soldiers. I'm sure we've all seen this one already. Consists of three consecutive green candles that are all open with the previous candle's body with a close over the previous day's closing. So as you can see here, it closed, it opened, it closed higher, it opened, it closed higher, right? So this isn't a perfect, amazing example because usually, I mean, with stock markets, you might be able to see this a little bit more, where it sort of opens down here in between. You usually are going to see that they close and open at sort of where they last closed, right? It makes more sense, but for the sake of this example, this is sort of how it looks. Should not have long lower wicks, so the wicks are generally kind of short. They're not really all that long. Indicates continuous buying pressure, meaning that more people are still buying. The size of the candles can be used to judge continuation or possible retracement. So the size of the candle, right? If we still see that they're sort of coming up, coming up, coming up, but the candle size kind of becomes smaller and smaller and smaller as it goes up. So, right, we could say, oh, three white soldiers right here. For all we know, this is going to be higher and then much higher, much higher. But it might get to a point where, this candle right here is still higher, but it's really, really small at that point. That could mean that there's a retracement of price or a trend reversal. Perfect example, maybe. Let's see, let's look for another one. Maybe here, right? Or not an ideal pressure, but a doji candle, right? Let's imagine that the doji candle wasn't there. We see a good trend, but then it gets kind of small, or there's some sort of resistance points and it gets pushed down. Same thing here, right? Higher, 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 higher. Then the size of the candle might tell us whether or not there's going to be some resistance or if there's a slowdown of that pressure. Again, none of these patterns are going to be 100% perfect, but there's a good example right here of the three white soldiers where it goes higher, high, or actually look, perfect example of a inverted hammer and then followed by three white soldiers. Once that's done, sort of a shooting star-esque, and then a trend reversal down, then another semi-hammerish looking, very long wick, trend reversal, up, rejection, giant engulfing, pushing down, sort of like an engulfing candle, but not really. And then, right, so you want to take these into account, right? You want to look at these as patterns in the greater picture. Like Nick said earlier, not everything's going to be exactly perfect, but it's going to give you an idea of how to look at them or how to read them better. We also have the rising three. So bullish continuation candle patterns that occurs in an uptrend. The fifth candle is usually bullish candle, which serves as proof that the sellers did not have enough to reverse the prior trend. So I believe last time when we went over BTC, we sort of saw something like that, kind of over here, somewhat. That there was some, if we look at the weekly or the daily, it'll probably play out a little bit more. Where'd it go? So see right here, where there was a high, right? A high, then a couple low, then it really didn't see, it saw some resistance. There wasn't enough of sell pressure, and then the bulls came back in and they started to buy. And look, we see a sort of the three white, what was it, the three white horses or three white, whatever they're called, the three white soldiers, and the price went up, right? So rising three is something that looks something like this, where there's a decrease in price. It seems to have been an interruption of sorts, and then the price came right back up. So again, good example, not perfect, but very close to what it would actually be or how it would look in practical terms, right? So rising three method. Um, Let's see, fifth candle proves that sellers did not have enough to reverse a prior, so there wasn't enough of a sell pressure to actually reverse the upward trend. It was just a short sort of pause of the trend, and then more of a bullish sentiment came that followed it. So triple patterns again, but this time the reverse, sort of the bearish side of this. We got the three black crows, consistent of three consecutive red candles that all open within the previous day's candle's body and close at a level below the previous candle's lows. Should not have long higher wicks, indicating continuous sell pressure, candle size, and wicks. So same thing as the three white soldiers, same thing but in reverse. Identified sort of by a trend, lower lows, lower highs, all the way through. And then the falling three, same idea as the rising three, bearish. Well, I guess I messed that up. Bearish candle continuation pattern that signals an interruption, but not a reversal. Two long candlesticks in the direction of the trend with three shorter counter trend candles. Bulls have not broken through and have not forced a reversal. So there was some sentiments, made the price look good. Some bulls decided, hey, we're going to buy. We think this is a good reversal time, maybe show some resistance. Some bulls came in, but the majority of the bulls probably stayed out of the market. And then the bears sort of took over and then pushed the price even lower. So perfect example there. All right. Any questions or anything you want to add to that, Nick, regarding candlestick patterns?
No, I think that that was pretty good. I do want to note that generally speaking, the longer a range of data a pattern covers, the more solid that sentiment is. So what I mean by that is like the single candle patterns that we spoke about, like the hammer, on its own isn't enough to really like sway me one way or another. But if a pattern consists of three candles or five candles or like an accumulation of data rather than just one single data point, it, it gives me a much stronger belief in whatever that pattern is telling me. So if I see a pattern that involves five candles and that's supposed to be a bullish signal, I would much prefer to see something like that as opposed to a one candle pattern that shows me a bullish signal. So just something to keep in mind. And it kind of goes back to what we've kind of been circling this whole time. The more information, the better. Um, and so yeah, generally I'm trying to gather points with as much data as possible, as opposed to saying, oh, there's one hammer candle, let me make a decision off that. So just something to keep in mind while you're trading.
Yeah, yeah, but I think that's perfect. The fact is, it also goes back into whether or not you're looking at a day, an hour, 4 hour, a week, a month time chart, right? This pattern here on the week is much stronger than if I was looking at it at 3 hour time frames, right? These are very short intervals. Where this is a long interval, 4 hours, or sorry, a week or a month even. These are very long term signals that gives us better idea as to the overall strength of that pattern, right? If I see a more bullish trend on the week pattern, these are what, 1, 2, 3, 4, 5 weeks, six even, and then if we counted this, 6, 7, 8, 9 weeks of bullish sentiment. Bullish sentiment is much stronger than a 1 week that was bearish, or even 8 days of bullish sentiment, because that's only 8 days out of the 30 that this accounts for. So that's also a thing that you want to keep in mind of where is that candle pattern taking place? Is it taking place at the 1 hour, at the 2 hour, or at the 1 week, 1 month time frame? Because that also tells you a lot about what's happening.
Yeah, and to add a little kind of cherry on top is when you're looking at those time frames, you also have to keep in mind that those time frames are going to dictate the amount of time that that pattern is going to play out. So if you're the kind of trader that you want to kind of come in and out within the day, even if you do see a super solid bullish pattern on the week, time frame, your trade might not play out that same day. So you also have to remember to trade within your time frame. If you're comfortable with staying in a trade for a month or two or three, then the weak candles might be a little bit more fitting. But just keep that in mind. If you're trying to get in and out of a trade, make sure you're in the appropriate time frame, because obviously bullish sentiment on the week is awesome, because it does show that like long term bullish sentiment. But if you're planning on coming in and out, or you're, I don't know, tight for money and you're trying to make like a quick flip, then those weak bullish sentiment might not really work for you. It doesn't really apply to your situation. So just make sure you're trading within the time frame that you're expecting to enter and exit the market.